Welcome back to Finding Forex, everyone, helping you find your way and your footing around the Forex market. This video is quite a special one, actually. It is about the whole situation going on Wall Street, going on with GameStop, and why this is such a big win for the retail investors, the small investors like me and you watching your video. We're going to be starting from the top and working our way down, going into great detail on what is going on and why this is actually such a significant thing. So, without further ado, let's jump into the video. So welcome back, everyone. This time we are actually on the charts and we are looking at the GameStop Corporation stock on a monthly time frame. Now that is a mouthful, and I wanted to bring you guys onto the charts to give you an idea of what it looks like and to understand why what has happened. So if we look in around 2013, in this sort of area around here, we had a huge peak, probably the last big peak of GameStop's stock. And then ever since then, since 2013, all the way until 2020, we've just been slowly and carefully trickling down. And this is because the fundamentals of GameStop and what the hedge funds are looking at. You need to understand first what the hedge funds are thinking in order to get an idea of why the market has moved where it is. So in GameStop's case, if you look at GameStop, it's a stuck in the rut stock. Most companies are now moving to more of an online retail space, whereas GameStop hasn't really taken that same approach. With the pandemic being so prominent and them announcing losses in certain years, it just makes for the perfect time to short the GameStop stock. If you look at most games now, you can buy them online. You've even got some games that are solely only downloadable via the PlayStation Store, Xbox Store, or Steam. So a lot of things now have moved to online, and this is where GameStop has just dropped the ball, because where they haven't moved online as much, the pandemic's hit, they're losing revenue, which means you don't want to invest in a buy for GameStop because there's just no point, because they're losing revenue, they're not making as much as they could. So fundamentally, looking at this stock, it has to go down. And that's what these hedge funds have been doing since 2013. They have been selling off huge positions. I heard that was something like 148% sold, which is crazy. And it's over 100, which is possible, but very unlikely. So it's 148% sold, which means it's just going to trickle down slowly. And this is where the Wall Street Bets subreddit comes in. These corporations, these hedge funds actually publish what they're doing when they're doing it. So if they're short in a position, they have it in like a little annual or quarterly report. And when they publish these reports, it's viewable for the public. And Wall Street Bets had a huge following of thousands, of hundreds of thousands, if not millions of currency or stock traders. And they looked at these fundamentals and these hedge funds, and they saw that they're shorting this stock heavily. Like heavily, 13.1 billion loss heavily. So this is what they said. If we can push price up enough, we can cause a short squeeze, and then that'll push price even higher. So now a lot of you might be thinking, well, what is a short squeeze? And a short squeeze is actually very simple. You have all these hedge funds that are in selling positions. So essentially what you have to do is push the market the other way. So short squeeze and long squeeze. If it's going down, you want to push price up to cause a short squeeze, and if it's going up, you want to push down to push a long squeeze. Essentially, this is what they had in mind. If they can push price high enough for all these institutions to be in a heckload of drawdown, they then need to buy back their positions in order to cut their losses, causing the short squeeze. Essentially what you have to do, push price enough so these hedge funds are in enough drawdown, pushing price even higher because these hedge funds now have to cover what they're losing on their short positions. And as you can see, this short squeeze worked beautifully. They ended up pushing price high enough for these institutions, these people that control the market. Some refer to them as market makers, some refer to them as smart money. Regardless, these are guys on Wall Street and on the London Stock Exchange who have enormous capitals who control the market. Now, this is why this is such a big thing, because no retail investor has ever been able to move the market, and especially like this. So what's happened, these Wall Street Bets Reddit gurus have decided to all buy GameStop's stock, forcing price up enough to then cause the hedge funds to buy back their short positions because they need to cover their losses. And you can see it's gone down from roughly $1 all the way up to $484. Now, as great of a win it is for us smaller guys, us small retail investors, the big boys are angry. They're in fact so mad, they tried to get the stock market pretty much switched off. I know that a lot of my fans have come from my Fluky Lukey account and subscribed here to learn about Forex and the stock exchange and that sort of stuff. So essentially what's happened is the hedge funds are the big boys in this, and they've gone to the governing bodies of the stock market, essentially asking for it to be switched off. And this is where Robinhood step in. So at the time of these huge losses, obviously hedge funds everywhere reporting ridiculous amounts of money lost. Like I said earlier on, 13.1 billion, 100% loss in one case of a hedge fund, which in my opinion, they should not have been leveraging their entire capital on one stock. Because this can happen. Even if it wasn't from retail investors, institutions can quite easily turn around and do the same. So these were leveraging 100% of their account on one stock, causing them to lose $13.1 billion and then reporting bankruptcy. So they're now going and asking for investors to reinvest their money. I think they got a couple of billionaires to actually invest. And then this is where the retail investor almost loses out because of the power that these hedge funds have. Robinhood, a very popular stockbroker app, somewhere where you can sort of trade the stock markets like you can with MetaTrader 4 for Forex. They've stopped the buying of the stock for GameStop. This was huge news. This has never been done before. No app, no broker has ever stopped the buying of a certain currency pair or stock price. And this is what Robinhood did. And this rustled a lot of people's feathers. Because basically, if you didn't know, what happens when you close a buy position, it actually turns into a sell position. So if you're only able to sell, but you can also only close your buying trades and you're unable to buy, all of this is eventually going to push the market back down. And essentially, this is what everyone's really mad about. The fact that these institutions have so much control and so much power and leverage, they've actually told apps like Robinhood, which are huge and have millions on their platform, to stop trading. This is insane. And someone actually tweeted out a very good quote. It's when the small guy loses or the retail investor loses, it's called capitalism. But when the big boys lose, it's called manipulation. And that's what they've been claiming. They've been claiming, the hedge funds and the banks, that this was manipulation of the market. Something, if you didn't know, happens in the currency market and the stock market every single day. If these institutions think a stock or a currency pair should go this way, they will make it go that way. It's fine when the little guys are getting manipulated out of trades, but when the big guys get somewhat manipulated out of a trade, it's then all hell's broken loose. So, in my opinion, ladies and gentlemen, I don't think there was manipulation going on. I think that this was advice. You could see it as that. That's what they could claim. It was advising people to buy this stock because we want to push it up. But there was no manipulation, in my opinion, because this was a band of people who came together to push the stock prices. This was all done at their own risk. They didn't have to buy. They didn't have to listen. This was just maybe advice given to them that has pushed the stock market up. So these institutions that are claiming manipulation, I don't know. What do you guys think? Do you think it is manipulation? Do you think that the little guys should be let off with this? Because personally, I think they should. If you think and you know enough about Forex and stock market, this happens all the time and people get manipulated out of trades all of the time. So just let me know what you guys think in the comment section below. Next video is going to be a banger. It's going to be talking about getting started on Forex trading, actual Forex related video. Finally, it's coming probably next week. So be on the lookout for that. And if you're just starting Forex, this is the channel for you. Finding Forex, helping you find your footing and your way around the currency exchange market.